Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Coronavirus is still hurting precious metals prices, but keeping them in a weird position right now. This article is going to explain how silver's struggling amidst the coronavirus market meltdown and what that entails for the future of these markets. Not only just stock markets, but it's affecting precious metals as well, which we would think that the coronavirus would actually help boost precious metals as a safe haven alternative, but it's actually coming full circle. So while this is also affecting gold, not just silver, we see the gold to silver ratio at 94.9 to 1. That is extremely high, which means that silver either has to appreciate or gold has to depreciate, and more than likely it's going to be silver appreciating, because that is way too exaggerated, it's way too dramatic, it's way too severe, and something has to correct sooner than later. With that said, I also want to mention my giveaway I'm doing. If you want a chance to enter to win some free silver, and trust me, this giveaway is a really good one. You do not want to miss this one. Go check out the video I posted yesterday for a chance to enter. And all you have to do is be a subscriber and go and comment on that video. So very simple rules. Just if you want a chance to win, I want everyone to have the opportunity. A lot of people didn't see that video, so if you do want a chance to win some free silver, go check out that video yesterday. But with that said, smash the like button on this video. Let's see if this video can get 100 likes. I think we can do that. I think we can definitely get 100 likes on this video. Make sure to subscribe if you're new, because I do post daily videos. But with that said, let's jump into this article. So, equities markets around the world lost over 10% in value last week, over growing concerns about the coronavirus and how it would adversely affect the Q1 2020 GDP figures and perhaps beyond. One might have expected key safe haven metals like gold and silver to surge as investors switch from risky equities to safe haven precious metals, and that's kind of what I was talking about, how people would think that gold and silver would be the safe haven. Initially, this did prove to be the case, but gold and silver then also suffered badly. The latter particularly so, with gold to silver ratio, the GSR rising to an almost unprecedented 95 plus, meaning that it takes over 95 ounces of silver to match 1 ounce of gold in value. And the media has been full of experts predicting that silver will be the great beneficiary of the run-up in gold prices. And in the past, this has usually been the case, with silver acting like gold on steroids, as the saying goes, and that's because silver is more volatile. Silver hits higher highs and lower lows, as they say. And when the gold price goes up, that one generally rises faster pace, and indeed went up to almost $19 an ounce in the initial precious metals price surge on Monday. But it has come down far more sharply than gold since the ending of the week at $16.63. A massive fall, around 16% on the week, perhaps living up to its other description as the devil's metal due to its tendency to confound the expert opinions. So, they're saying that silver is definitely unexpectable, too, and unpredictable. It makes some unexpected turns, but it's also very unpredictable in the rate that even when things are looking like they're going good, it can take a left turn, and out of nowhere, things can switch with the snap of a finger. And that's also due to its volatility, but also due to the different positions, the different things that are affecting silver prices. Now, COVID-19 is definitely going to be a tricky one, because we don't know how things are playing out yet. We don't know where prices are going to lead yet, whether or not the gold to silver ratio is going to have a pull on it, whether surplus will, whether the economy will, whether the political side of it, the dollar index, stock markets, we don't know. And especially how the coronavirus is still spreading, we don't know where that's going to lead. So there's a lot of unknown variables, a lot of unknown factors that a lot of people don't incorporate. You have to incorporate that when you're looking at a market realistically. You have to consider the fact that we don't know what's going to be happening in a couple weeks from now or a couple days from now. So anyways, the silver price in particular seems to have been engineered downwards, and probably the gold price too. Ted Butler, who follows the ups and downs in the precious metals market, has the reason behind this being prospective losses that would be incurred by the Big Seven and gold and silver shorts at higher price levels seen at the beginning of the week. In his article entitled Bear Stearns Deja Vu, he points to the similarities with Bear Stearns' collapse in 2008, leading to JP Morgan taking it over a knockdown price. In that case, Bear Stearns' short position in the silver market, with the silver price rising, potentially exposed it to enormous paper losses. Subprime market collapse, which brought down the Lehman Brothers later in the year, exacerbating the falls, did not come soon enough to rescue Bear Stearns. Butler reckons the potential debt exposure for the big seven shorts in the rising precious metal price scenario was as much as $8 billion, and on the way could be mitigated was for gold and silver prices in the futures market to be brought down very sharply, and so exposure could be liquidated as much as lower price levels. As silver is a hugely smaller market, this would be much easier to do. Consequently, gold was brought down only around 6% and silver 16% the week to peak through. And that's talking about how silver is a small market. We have whales in the market, which are people who own enough of the market or enough silver that they can actually affect the price of silver by simply buying or selling. They have so much of that stock, so much of that asset, that they single-handedly can make prices go up and down. That's a lot of power. That's how small the silver market is. So you want to be careful with that, because right now, while a lot of things are going towards silver, from a negative standpoint, people also are investing from a very emotional standpoint in a very wishy-washy mind state. This is where I'm talking about that panic selling, mind state where they think prices are down, they got desensitized, they accepted the $19 level prices, so now this $16 level is kind of sitting on them the wrong way, and they are thinking about panic selling and just getting out completely and going to something else, whether it's gold, whether it's platinum, palladium, whether it's stocks, equities, whatever the case is. But it's there, and it's definitely true, especially with something that's as slow and bearish as precious metals. It can be true. So Butler reckons the potential debt exposure. I already read that part. So undoubtedly, profit taking will be played in part in the falls of both gold and silver. But the 16% silver decline is way above the likely falls due to this aspect of trading, even possibly aggravated by a resiliation that industrial demand will almost certainly fall due to the coronavirus. But again, that would be unlikely to generate a fallback of this kind of magnitude. That leaves market manipulation of some kind as most likely cause of this huge weekly fall, and Butler's explanation fits the theory well. In market manipulation, going back to JP Morgan's, the Dutch bankers, the Merrill Lynch, and the people that are spoofing, corrupting this market, using their power at hand to keep gold and silver in a bubble, more likely silver, as they can buy silver for cheaper, placing false buy orders on these exchanges. Spoofing has hurt markets for a long time. Silver's been manipulated for hundreds of years. One of the earliest cases was actually FDR changed the gold to silver ratio from 16 to 1 to 75 to 1. And that's not a theory. That actually happened. He changed it from 16 to 1 to 75 to 1 overnight, which put silver at a huge lower hand. And it's never really corrected back since then. And gold to silver ratio should be around 8 to 1 because it comes out of the ground 8 to 1. But why is the ratio sitting at 95 to 1 right now? That's the big question. Are these people behind the scenes manipulating these prices? So gold and silver prices both picked up a little this morning, but still remain weak. Asian equities were up, but European stocks, after opening strongly, pulled back quite sharply and were unchanged to the downtime at the time of the writing. The GSR rose again to the high 95s, which means that silver is underperforming gold. Of course, it remains to see how the U.S. markets react once they open. So right now, very, very interesting times. I'm really curious to see where gold and silver go due to the coronavirus and really looking at the consequences that come out, how this plays out. That's the big question. How is this going to play out? Is gold and silver going to be able to recover from this? And if it's going to recover, will it continue that rally that was started a couple of weeks ago? Or are things going to keep going downwards? I'm going to leave it up to you. I'm curious what you guys and gals think. Also, make sure if you want a chance to enter my giveaway, chance to win some free silver. This is my third giveaway I've done in 2 weeks, giving away lots of silver. It's just my way of saying thank you for all the support on the channel. I cannot thank you guys enough. It really does mean the world to me. So make sure to smash that like button. Make sure you subscribe if you're new, because I do post daily videos. I'm going to wrap this video up here. Like I said, the link to this article will be in the description if you want to check it out yourself. This was Silver Slayer. I'll see you guys soon. Peace.